Let's bring in Kevin Green, senior markets correspondent, to help set up the action today. All right, KG, we're ready for the roller coaster today. You called this yesterday in terms of the price action that we saw when we initially saw gains and then ultimately finished with a fade. What was it about the price action that you were able to see that?
Well, it wasn't only just the price action; it was just the perceived risk that is out there, right? I mean, the China tariffs situation, just even having them put on, was probably going to be a little bit of a risk for the equity markets as a whole, especially as some of these mega cap names like an Apple could be impacted by these tariffs, and then also the threat of retaliation from China, which we obviously are seeing that this morning, as they have now re-rated their tariffs up on the United States up to 84% here. So you saw a little bit of that, and then once the market kind of opened up, when the U.S. equity session, you started seeing some of that buy volume starting to decline a little bit, getting a little bit heavy, and then that's when we started seeing the pullback here. So, the market right now obviously is experiencing a lot of volatility. You have the VIX sitting at around 56.5 right now, so it's implying around a 3.5% move in the S&P 500 for today. These are the upper downside there, so that's obviously very elevated. We have a lot of unknowns that are within the market right now, and I think now the biggest risk, Diane, is what is going to be our response to this new re-raise, and I think the market's going to probably be really focused on that. Liquidity has completely dried up when you're looking at the E-mini S&P 500 book depth. I think that's a very big concern. And then the last thing to keep on the radar for today is going to be treasury yields. Overnight, we started to see them spike a little bit. There is some speculation that maybe it's foreign sellers that are trying to kind of influence the markets a little bit. We don't really know that for sure, but we do have a 10-year treasury auction today. Around, I think, $39 billion will be auctioned. Let's see how strong or weak that auction is going to be. The indirect bidder portion of that auction is going to give you that indication of foreign demand. And if we do see a weak auction like we saw yesterday with the 3-year, I think that could probably provide a little bit more volatility here.
Yeah, I noticed and seen some commentary that the auction yesterday was weak. Let's talk a little bit about these China tariffs. I mean, China had pledged that they would fight to the end, and so they are hitting back with regard to the U.S. tariffs. So both sides increasing them with heavy effect, and we have the U.S. tariffs already in effect, China tariffs coming next. What sectors have the most exposure, or what sectors seem to be the most the weakest in this kind of a battle?
Well, I would say the technology sector is going to be the first one, and that's just because of market cap size and their exposure to revenue going from China, right, to drive growth. I mean, we kind of forget, but if you kind of look at the S&P 500, a significant portion of that, the top line revenue is actually coming from overseas, and so that's obviously going to be a big risk there. And then a lot of these companies like Apple can be in the crosshairs for a lot of these, retaliations. The agricultural market, something that goes unnoticed from a lot of traders and investors, but a very key part of the United States, just in general, will also be impacted. They can put on export controls or import controls when you're looking at China, and that could also weaken demand. We already are having a battle between South America and the United States when it comes to grain prices. And so there's a lot that's actually happening in the ag space that, once again, we saw this the first time around in the Trump 1.0, if you will, and the agricultural community actually did shift and it never kind of got back to where we were. And unfortunately, they're probably going to get impacted again. Now, the U.S. government's probably going to subsidize them for any type of perceived losses out there. But even the subsidizing of their business, Diane, really does impact the smaller farmers out there. And that's kind of a little bit of a big deal. So every sector, for the most part, is going to be impacted. But I think if you're kind of looking at tech, those are going to be really in the crosshairs. If you're looking at agricultural and exports of beef, pork, soybeans, corn, those will be impacted. Corn, not so much. I do want to put this out. Corn, not so much. We don't really export a lot of corn to China, but just the broader tariffs in general can kind of slow down export demand just in general because of the uncertainty that we have on the global stage.
Maybe we'll be eating a lot of corn here, but sticking with some of the focus on commodities, crude oil right now sinking more than 6% below $56 a barrel for a West Texas Intermediate. What's at play here? Is some of this about the tariffs? I know there's obviously a supply from OPEC Plus that had initially put some pressure on crude oil, but what are the signals that you're watching to here when it comes to crude oil?
Yeah, so for crude oil, it is flashing signs of a recession. Pretty much anything below that $65 level, if you're looking at a lot of energy traders, that was a very key area for us to be able to hold here. And now we have broken it, and you're seeing it kind of move to the downside here, sitting at around $55. And it's not outside of the realm of possibility that crude could go down to around $45 here in the coming weeks and or months. But at some point in time, 2 months, 3 months of these low prices, Diane, you're going to see U.S. shale production or oil production in general start to tighten up a little bit to try to right size and try to provide price stability. And that is going to be actually the bigger concern, because if we do come to some form of an agreement at that time when we tighten up oil inventory or even just production levels, that's where you can see massive spikes in oil. So right now it's definitely signaling a recession, just like pretty much a lot of these commodities. If you look at copper, the fall from grace there as well. One thing to keep in mind and keep your eye on here, we are close to seeing a contango type of market when it comes to oil just in general. What does that mean? That means that the front month contract could actually be priced at a discount compared to future contracts. And so that is something that we have not seen in the oil market for, I would say, about 4 years or so, 4 or 5 years. And that just is going to also signify that obviously inventory levels and production levels and concerns about demand are being priced in. And then that also will reflect also the transportation cost for U.S. Oil. I mean, we drill a lot, we produce a lot, we export a lot, but at the end of the day, Brent is still economically cheaper for these countries overseas, like the EU, that want to purchase. So that's also something to be mindful of.
Okay, that is great perspective and great framing on that for crude oil. I was wondering if I haven't paid attention enough to the levels in terms of years gone, if we're back at essentially pandemic levels. Let's talk a little bit about Apple. You mentioned it earlier, especially in terms of its exposure to China. It's on the receiving end of an upgrade here. Tell us some of the details.
Yeah, we are seeing Jefferies. They might be changing this, Diane, but Jefferies did upgrade.
I know.
Jefferies did upgrade Apple from underperform to a hold at the new price target of lowered their price target to $167.88. That's down from $202.33. They're basically trying to right size for the price declines that we have seen. Obviously, the iPhone shipment estimates are getting cut by a lot of analysts out there because of the risk of global recession, of a global recession, and then also just the lack of a refresh cycle that's taking place here. And they do believe that if Apple is going to be exempt from U.S. tariffs, that could actually be a little bit of a tailwind for them. So they're looking at this as more of a value play, and a lot of the uncertainty being priced into Apple for right now. And that's why they're providing at least an upgrade, right? It's not a buy, but it's at least an upgrade from that underperform rating that they had before.
Yeah. We'll see if they change direction on that. And really quickly again, because I know people like to pay attention for your levels. We broke below 5,000 yesterday on the S&P 500. Where do we go from here? Because we're essentially back and flirting with a bear market. Where do we go from here? What are you looking to as your targets?
Yeah, so for today, this is a wide range, and the downside probably will change in the next 30 minutes or so. But for the upside, looking at 52.25, 52.20 was around or 52.50 was an area of resistance yesterday. To the downside, what I'm seeing is 4,500. I'm not sure if we're going to be able to get there, but 4,500 is what I have on the radar for today. And let's see if we actually have more options of flows that kind of confirm that price level there. But wide range, I would expect some fireworks. Once again, 10-year Treasury is going to be a vol event. Any announcement from the White House is going to be a vol event here. And so you got to stay nimble, stay tactical. And if you don't have to put money to work, sometimes it's just best to watch instead of putting some unnecessary risk out there.
Yeah, certainly seeing a lot of movement in terms of the 10-year right now, even ahead of with that auction happening today. All right, thanks a ton. That's Kevin Green, senior markets correspondent. Right now, 10-year, 19 basis points higher right now.